Hey everyone, welcome back to Corporate Decoder, the place where we unravel the hidden stories within company filings. And tonight, we are looking at CenterPoint Energy. Their latest 8th report is packed with deal, making drama and a bit of financial maneuvering that got my attention. Before we dive deep into the nitty-gritty, if you are new here and love to get the real scoop on corporate actions without the jargon, make sure you hit that subscribe button. And hey, we've got a fantastic community brewing on Discord, linked in the description below, where we break down these filings even further. Come join the conversation. So, what exactly happened on the 20th of October 2025? Well, CenterPoint Energy Resources Corp., a subsidiary of CenterPoint Energy Inc., announced a significant deal. They've agreed to sell all of their ownership in a company called Vectren Energy Delivery of Ohio LLC, or VEDO for short, to National Fuel Gas Company. This is a big move, and it involves selling VEDO, which really acts as the asset that CenterPoint Energy Resources Corp. Is offloading. Now, CenterPoint Energy Inc. is a publicly traded company, and you can find their shares on the New York Stock Exchange under the ticker symbol CNP. They also have some serious debt, like the 6.625% senior notes due in 2037. That is a reminder that while they're making deals, they've also got ongoing financial obligations. This whole announcement comes through a Form 8K report filed with the US Securities and Exchange Commission, or SEC. CenterPoint Energy Inc. itself is a Texas corporation, while its subsidiary CenterPoint Energy Resources Corp. Is incorporated in Delaware. The filings show their commission file number as 1 to 31,447F, or the parent company. Pretty standard stuff for a public entity. Their principal executive offices are located in Houston, Texas, a hub for many energy companies. And for their subsidiary, CenterPoint Energy Resources Corp., the commission file number is 1 to 13,265. Now, there are a few checkboxes here that registrants use for specific situations, but for this report, none of these appear to apply, meaning it is a standard filing for the events described. CenterPoint Energy Inc. has its common stock registered on the New York Stock Exchange, which is a pretty big deal for any company. And as I mentioned, the ticker symbol is CNP. It is listed on the New York Stock Exchange, which is the primary exchange where investors can trade its shares. Their subsidiary also has those senior notes listed on the New York Stock Exchange, showing their significant debt presence. The company is not an emerging growth company, which means they have to follow all the standard reporting rules without any extended transition periods for new accounting standards. The heart of this 8K filing lies in the announcement of a major deal. This is where the action is. CenterPoint Energy Resources Corp., which we'll call the seller, has inked a deal with National Fuel Gas Company, the buyer. The deal is all about selling 100% of the company called Vectren Energy Delivery of Ohio LLC, or VEDO. The price tag for this sale is a hefty $2.62 billion. Now, that number might change a little bit depending on certain factors ironed out in the agreement, but that is the ballpark figure. How are they paying for it? Well, it is a mix. The buyer will pay $1.42 billion in cash at the closing. That cash payment can be adjusted based on things like the working capital, any regulatory assets or liabilities, and capital spending for VEDO right when the deal officially closes. The other part of the payment is pretty interesting. It is a $1.2 billion seller promissory note, which is essentially a loan from the buyer back to the seller. This note is set to mature in just under a year, so 364 days after the closing. This setup allows the buyer to spread out the payment and gives the seller a note that they can hold or potentially use. So when will this all be official? Well, it is not a done deal just yet. They need to get regulatory approval. This includes a review under the Hart-Scott-Rodino Antitrust Improvements Act, which is a standard check to make sure the deal does not harm competition. They also need approval from the Public Utilities Commission of Ohio. And of course, both sides need to stick to their promises and have their facts straight. The good news for the seller is that this deal does not depend on the buyer securing financing. That means the buyer has the money sorted out or is confident they will. They're aiming to close this deal in the fourth quarter of 2026. There is an inside date of the 1st of October 2026, which is like a deadline to get everything done. But they're hoping to wrap it up before then. In the meantime, between signing this agreement and when the deal actually closes, the seller has to ensure VEDO keeps running smoothly. Business as usual, they can't make any sudden major changes to how VEDO operates without the buyer's okay. The agreement itself is filled with all the standard promises and guarantees you'd expect in a deal like this, covering VEDO and the sale itself. And the seller has agreed not to talk to any other potential buyers for VEDO while this deal is in progress, which is pretty standard. What happens if things drag on? Well, the agreement has clauses for ending the deal. They can extend the deadline if all conditions are met except for regulatory approvals. This could push the closing date out for up to 24 months if both sides agree, but only if the main hurdles like regulatory sign-offs are the only things left. And if the deal falls apart under certain circumstances, like a major violation of the agreement, or if regulatory issues block the sale, the buyer might have to pay a termination fee to the seller. It is like a penalty payment to compensate for the wasted effort. Now, following up on that big announcement, there is more. The day after the agreement was signed, CenterPoint Energy put out a press release to let everyone know about this sale. They also put a summary of that seller note, the $1.2 billion loan part of the deal, on their website. This gives a bit more detail on how that note works. This section of the filing is important because it clarifies that the press release and the summary note are for informational purposes and aren't considered official SEC filings in the same way the main 8K is. It shields them from certain liabilities. This next section dives deeper into the details of that seller note we just talked about. At closing, the buyer, who they're also calling the borrower here, and the seller, acting as the lender, will sign a formal seller note agreement. This agreement is based on a form that was already attached to the original purchase agreement. Basically, the borrower has to issue this official promissory note promising to pay back the $1.2 billion loan, plus any interest and other charges. The interest rate on this note is set at a pretty solid 6.5% per year. Payments on this interest are due quarterly in March, June, September, and December, with the final payment including the principal happening on the maturity date. Interest payments might also be due if the loan is paid back early. As we mentioned, this note has a short lifespan, maturing no more than 364 days after the deal closes, and CenterPoint Energy, as the lender, has control. The borrower can't pay back the loan early without getting written permission first. When the buyer pays back this $1.2 billion note, CenterPoint Energy plans to use the funds for its general business operations. Now, this note comes with strings attached in the form of covenants. These are rules the borrower has to follow until the entire loan is paid off. These covenants include things like regular financial reporting, making sure the borrower and its important subsidiaries stay in business. And importantly, they can't let their debt to capitalization ratio go above 0.65 to 1. That is a significant debt restriction. There are also restrictions on creating liens, which are claims on assets, selling off major assets, and even how Vado itself can be managed. They can't have Vado with non-wholly owned subsidiaries, for instance. These are all aimed at protecting the seller's investment in the note. And if the borrower messes up, it is an event of default. This can happen if they miss payments, default on other debts above a certain amount, break covenants, go bankrupt, have large unpaid judgments against them, or if there is a change of control at the borrower. These are pretty standard but also critical. Conditions that could trigger immediate repayment demands. Like most filings, this report includes a section on forward-looking statements. These are basically statements about the future, like plans and expectations that are not guarantees. They use words like anticipate, believe, and expect. And the big disclaimer is that the actual outcomes might be very different from what they predict. That is just the nature of business and the future. They list a bunch of risks that could mess things up, from not getting regulatory approval to legal issues, or even just the disruption of completing such a big deal. They point you to their other SEC filings for the full rundown of potential problems. This section just lists the exhibits that are part of this filing. The key exhibits here are the securities purchase agreement itself, the press release announcing the deal, and that summary of the seller note. Exhibit 2.1 is the actual contract. They've omitted the schedules and exhibits, meaning the really detailed fine print, but they can provide them to the SEC if asked. Exhibit 99.1 is that press release we mentioned, providing the public-facing announcement, and Exhibit 99.2 is the summary of the seller note, giving investors a quick look at that financial instrument. Finally, Exhibit 104 is the interactive data file, which uses XBRL tags for electronic data analysis. And the report is signed off by Christy L. Colvin, who is the Senior Vice President and Chief Accounting Officer for CenterPoint Energy, Inc. She also signs off on behalf of the subsidiary CenterPoint Energy Resources Corp. So, bringing it all together, CenterPoint Energy is selling a significant part of its business, Vado, for a substantial amount of money. The deal structure is interesting, with a large cash component and a seller finance note, which is essentially a short-term loan from the buyer. This move signals a strategic shift for CenterPoint, likely to streamline operations, reduce debt, or raise capital. The $2.62 billion price tag is significant, and the $1.42 billion cash portion will provide immediate liquidity. The $1.2 billion note, however, carry some risk and repayment obligations for the buyer. The need for regulatory approvals means this deal could still face hurdles, and the market will be watching closely to see if it closes by the projected date in late 2026. From my perspective, this sale appears to be a solid move for CenterPoint. By divesting Vado, they are likely shedding a less core or perhaps less profitable asset to focus on their primary energy delivery businesses. Getting a significant cash injection and a short-term note provides flexibility. The 6.5% interest on the note is a decent return for CenterPoint, and the covenants attached to it protect their position. However, the success hinges on those regulatory approvals and the buyer's ability to meet the note's terms. It is a calculated strategic play. CenterPoint seems to be cleaning house and sharpening its focus. The risks are primarily external in the form of regulatory hurdles and potential market shifts affecting the buyer's capacity, but the internal execution looks sound. Alright, that is our breakdown of CenterPoint Energy's latest filing. What is your take on this massive sale and what it means for the company's future? Drop your thoughts in the comments below. If you found this analysis valuable, please hit that like button. It really helps us out, and subscribe for more deep dives into corporate finance. And don't forget to join our Discord community linked in the description for even more insights and discussions. Thanks for watching, and we'll see you in the next one.